What exactly is the taper tantrum that everyone keeps talking about? Will the market crash as the Fed begins to reduce its bond purchases? And most importantly, what does this mean for our investments, gold, and silver? I'll answer all of these questions from my personal perspective and opinion in this video. So, what exactly is the taper tantrum? Well, back in 2013, former Fed Chairman Ben Bernanke made the announcement that the Federal Reserve would reduce its Treasury bond purchases at some point in the future. Now, according to Investopedia, and I quote, in the period since the 2008 financial crisis, the Fed had tripled the size of its balance sheet from around $1 trillion to around $3 trillion by purchasing almost $2 trillion in treasury bonds and other financial assets to prop up the market. Investors had come to depend on ongoing massive Fed support for asset prices through its ongoing purchases. This prospective policy of reducing the rate of Fed asset purchases represented a massive negative shock to investor expectations as the Fed had become one of the world's biggest buyers. As with any reduction in demand, with reduced Fed purchases, prices would fall. Bond investors responded immediately to the prospect of future decline in bond prices by selling bonds, depressing the price of bonds as a result. Of course, falling bond prices always mean higher yields, so yields on U.S. Treasuries shot up. Now, the interesting thing is that the market mellowed out after this announcement as the Fed continued to buy bonds. So the market had a bit of a worry last decade when tapering talks abounded. But what about this decade? What about this time? Well, this time, I think the reaction will be even more mild. Why? Well, if you take a look at the trajectory of bond ownership since Ben Bernanke was the Fed chairman, you'll soon realize that massive tapering would actually be impossible for the Federal Reserve at this point. And that's according to the CBO, the Congressional Budget Office. You see, the Federal Reserve is one of the biggest buyers of bonds under the debt held by public category. That category also includes individuals, corporations, state, local, and foreign governments. Now, foreign governments were large buyers of U.S. debt. However, things started to change last decade when the Federal Reserve began buying more and more debt. Now, check this out from Wikipedia. Just going to scroll down here. And I quote, let's take a look at the debt holdings right here. Historically, the share held by foreign governments had grown over time, rising 13% of the public debt in 1988 to 34% in 2015. In more recent years, foreign ownership has retreated both in percent of total debt and total dollar amounts. China's maximum holding of 9.1% or 1.3 trillion of US debt occurred in 2011, subsequently reduced to 5% in 2018. Japan's maximum holding of 7% or 1.2 trillion occurred in 2012, subsequently reduced to 4% in 2018. Now, that might not sound or be as much of a problem for the United States if the CBO, again, the Congressional Budget Office, hadn't forecast an increase in ownership of the U.S. debt held by the public. If foreign holders of U.S. debt are reducing their exposure to bonds, and the only rapid increase in exposure is coming from the Federal Reserve, you can make a pretty decent assumption that the Fed will be owning a lot of debt in the coming years. Now, the CBO updated their bond holding forecast since 2020 and have stated in their 10-year outlook that, and I quote, the CBO also forecast the debt held by the public would rise to 98% GDP in 2020, compared with 79% in 2019 and 35% in 2007 before the Great Recession. So that is a huge rate of growth, and obviously the Federal Reserve will likely play a large role in that bond ownership. But even though this is likely the trajectory for the US bond market, there are participants within the stock market who seem to be on edge. A couple of Fed presidents mentioned that if the economy continued to do well, the Fed would begin or should begin to discuss an adjustment to their bond purchasing rate, meaning that they may begin tapering back to the $120 billion worth of bond purchases that they have been making per month to something less than that, obviously. Now, some are speculating that the true taper talks will begin this summer or by the end of the summer, and the true tapering will begin by the end of the year. Now, I've said that if real yields begin rising, I'll consider selling some, but definitely not all, of my gold and silver. But is there a way for us to get a little bit of a sneak peek into when the Fed will begin discussing tapering so that, I can get ready to sell some of my gold and silver? Well, check this out. It was provided by Robin Brooks on Twitter. He states the following regarding the taper tantrum of 2013, and I quote, "The 2013 taper tantrum, left-hand side, didn't come out of thin air, and it wasn't a change in Fed reaction function. It reflected a more bullish FOMC reading of the economy, which coincided with a rise in our data surprise index," right-hand side in the black. "That's what's missing now, positive data surprises." So, with news like what we received the other day regarding the May jobs report, things aren't as peachy keen as the Fed might like when it comes to the news coming from the economy. This definitely wasn't a positive data surprise for the Fed, whose dual mandate is to maintain price stability and full employment. So, if the Fed begins tapering, I don't think that the market will crash, and I actually believe the tapering will be mild. However, we do have a level of margin being taken out by retail investors that is pretty astounding. So that might need to be corrected a little bit. That might shake up markets a little bit. I do think that I will sell some gold and silver once tapering begins, or maybe just before. Of course, we might start to see some talks of it once we get more of these positive data surprises. So I'll likely continue to keep my equities, commodities, and currencies portfolio that I have chugging along as usual. I won't do anything crazy with that. I'll just continue doing what I'm doing with it. But guys, check out the first link in my description. I'm building a wait list for one-on-one video and audio calls to speak with me personally regarding gold, silver, and finance, etc. Thank you for watching. Let me know what you think about all of this in the comment section. Hit that like button and please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.